Hey, what's up, everybody? It's Greg with Advantage One Brokers. This is the ADV One podcast. We have a special episode this week. It's going to be a live episode during the weekly training, and we're going to be doing our mortgage protection clinic with me and Spencer Long, president of the company. Spencer, how you doing, man?
I'm doing good. Staying busy, but I'm doing good.
Yeah, I know I know exactly how you feel.
Oh,
Staying
yeah.
super busy. So what we're going to do is we're going to run this a little bit unique. We're going to go from start to finish, A to Z, flash to bang, mortgage protection, starting with leads, lead flow, setting your appointments, scheduling, doing your actual phone script, in home, psychology of the sale. You could think about it. We're going to go over it today. Spencer and I are going to go over it. If you guys have any questions, feel free, type them in the chat. Okay. I'm not going to address any questions though until the end, because we may actually go over those questions throughout. Okay. So with that being said, I'm going to turn it over to you, Spencer. Let's go ahead and let's just start off talking about, how do you prep for mortgage section?
Well, I mean, starting point right here is definitely starts, like you mentioned, with leads. Because without kind of leads, without getting in front of people, you're not going to have a very hard time or very easy time actually closing kind of different individuals. So, yeah, guys, can you please mute for me here really quick? Thank you. So, leads. On the contrary to a few other groups or different IMOs, I'll probably be the first person to tell you, you don't just have to get our leads to truly be successful. The bottom line is you need leads. And I bring that up because I've met a lot of very unique individuals that sell and get in front of their clients in different ways, whether it be our leads, whether it be internet leads, use a word of mouth, referral kind of lead. To give you guys an example, I'll be the first person to admit I can't do something like this. But I met an individual a while back who had this program called the rolling referral. And he would literally get 2 leads a week. And out of those 2, he'll close 1. And then he'll literally convince that person to say, hey, I need a list of your 5 family members. We're going to go talk to them right now. Come on. I'll literally jump in their car to go talk to 5 family members. And then those 5 people know 5 other people. And it's this rolling referral. He literally got through to talk to about 20 different people a week, and he was doing about $10,000 a week, literally off of 2 leads. So there's a lot of ways to get in front of people. There's a lot of way to make sales. But the biggest thing before we go into any kind of product training or scripting or anything like that is you do have to find a way to get in front of at minimum 12 people a week. Okay? Starts with leads. And again, you guys obviously know, or a lot of you guys know my strategy and what my structure is. And if you guys don't know, I'll kind of repeat it here for you. I'll buy 10 A leads a week of direct mail mortgage protection every single week. No more, no less. Doesn't matter if I'm on vacation. Doesn't matter if I'm in the Bahamas, if I'm sick, if I'm having a baby this week. It doesn't matter. I'm getting 10 leads a week every single week. I have literally done that for 10 years. And again, my strategy is out 10 leads over the cycle of that lead, which is about 3 weeks, because we all know if you get 10 leads, you're not going to get a hold of every single one of them. On that first week, you might get a hold of 6 of them, and you're going to schedule 5 appointments, which means now you have 4 leads that are going to roll over to the following week. And the following week, in week 2, you're still calling those people, you're still staying productive as you can. Out of those 4 that rolled over to week 2, you might get a hold of 2 more. And then in week 3, out of the 2 that are left, you get a hold of 1. And then in week 4, you get a hold of the last one. So again, over the lifespan of the leads, you should be scheduling about 8 or 9 appointments out of 10. But for me, I'm getting 10 leads a week, so I can book 15 appointments. And we can revisit how I'm doing this later in this kind of call. But essentially, I'm using different kind of strategies, whether it be off of referrals, whether it be through delivering my policies to make sure I am not leaving any money on the table whatsoever. And probably about 50% of all of my sales, I'm having second and third sales within the same household. I just said before, I'm not the guy, and I'll admit, I can't I don't have the confidence to be doing a rolling referral of saying, hey, let's go talk to your friends and your family. I can't do that at all. But what I can do, I can feel very confident doing, is selling multiple plans within the same household just by establishing need and showing them a solution to fill that need. And so again, like you said, Greg, everything starts with leads.
Yep,
okay?
Absolutely. And to kind of to highlight that a little bit, something that I've run into quite a bit since I've been in the industry. And I just want to highlight this because I'm sure there's probably somebody that's either on this Zoom call or that will watch this later that thinks, hey, what if I can make a relationship with a realtor and I give them some cards, some gift cards or whatever, or business cards for every single time that they get a sale, and they just refer that person to me.
Absolutely.
I've heard that a lot. Can you do it? Absolutely. But I would not use that as a rely on for your lead source, because it's going to be far and few between that you actually make sales with that. And people that usually are trying to do that, what I found, are people that are trying to prevent from even having to buy leads and like make their life easier. And you can't do that. It's not going to be a supplement, not a replacement. So
Yeah,
can you do it? Absolutely, but not as a lead source primary.
and if I can comment a little bit on that too for you, Greg. So it takes a special kind of individual to be able to come into this business, maybe coming with their only past experience being a W-2, and literally telling someone, hey, you have to spend X amount of money to go to work. I'll tell you, from me, again, I want to be an engineer. That's my background. I went to school to become an engineer. And so at 18 years old, I'm getting used to getting paid maybe $300 to $400, $500 a week. And now they told me at 18 years old, hey, I need you to go spend $500 a week to go to start even begin to work. And that was a very, very difficult concept for me to grasp. But again, I'm an engineer. And so I started kind of just reverse engineering, saying, hey, do I think 10 leads, $500 gives me 10 leads, do I think I can close one deal? They have the saying in kind of the insurance industry and the sales industry as a whole that you're not going to close 100%, but you're also not going to go bat out 0%. We kind of have the spectrum of anywhere from 10% to 90%. And what that means is no matter how bad you are, you're going to bump your head into sales using these certain kinds of leads. And on the contrary, it doesn't matter how good you are, no one's going to go bat 100%. You're going to get 90% is what our target is going to be, because you're always going to have one guy that can't qualify, or he has $10 billion of coverage, or he's just a complete jerk and he can't get any kind of value from him.
Yeah.
But so that was a hard thing for me to kind of grasp, is again, spending money to go to work, but just try to reverse engineer it that, hey, if you start off at 1 out of 10, you're still doubling your money. And then from there, you only are going to get better. Now you can go from 2 out of 10 to 3 out of 10 to 4 out of 10. That's how you're getting some very, very large returns. And again, you're right. There's, again, a lot of different ways to make money. There's a lot of different ways to do your client acquisition and getting in front of these clients. And I definitely actually encourage it. Trying to create relationships. We call it our business acquisition kind of deal, where if you create relationships with people who target your target market, that's free money, guys. So whether it be real estate offices, P&C companies, mortgage brokers, anyone who can think of that's talking to new homeowners and creating a mutually beneficial relationship with them, to where you can refer them business, or give them a referral fee, they refer business to you. And like you said, Greg, and there's one rule when it comes to leads, is do not let your success be determined by anything or anybody else. So you might be in an area that has a very, very low lead return. Maybe you live in a small town or county that has literally 200 people there. The worst mistake you can make is say, hey, well, I'm ordering 10 leads a week. I'm doing what Spencer's saying, but I'm just sitting around and I'm hoping and I'm waiting to actually get my 10 leads that may or may never come. For me, take the question out of the equation. Make sure no matter what you're doing, you're going to stay productive, and you're going to have at least those 12 people to meet with every single week. A great example is Christmas time. I don't know how it was for you, Greg, or for anyone on this call right now, but typically right around Thanksgiving time, Thanksgiving until like January 1st, a lot of agents will go to sleep. I call it like the hibernation season. And for me, being what I do, I love it because to me, that means there's no competition out there right now. And now granted, I have to get a little bit more creative of how I get in front of these people, because for those of you who don't know, if you're working at that kind of season, mail houses go, I'm sorry, mail return goes dramatically down.
Yeah.
Mostly because, again, remember the way that leads are being generated for at least direct mail is going to be off of data of people that are buying houses or refinancing. And again, typically those homeowners, they're not going to want to sell their house, or not a lot of people are buying their house during that season. So you have to get somewhat creative outside of just your standard direct mail A leads to make sure you're staying productive.
Yeah, you're absolutely right. I've seen it last few Decembers I've been in the business. Mail rates do drop. So that's a good time to start supplementing with other types of lead sources, B leads, telemarketing leads, internet leads, Facebook leads, stuff like that, just to generate more lead sources. So you can still sit with the same amount of people. But as you were saying, I mirror the same thing. I feel sales are easier during that time frame because people's are more thinking about their family and their loved ones. So it's actually easier to have those conversations.
My biggest months are oftentimes in November and December, because like I mentioned, there's no competition, and you're absolutely right. They're thinking about their family. They're getting together with their family, and again, especially during the pandemic of COVID, there's a lot of opportunity there because people are thinking about their own mortality, and as bad as that sounds, there kind of becomes this huge window of opportunity to really show the importance of insurance. Or in fact, they already know the importance of insurance. And we just have to not mess it up and give them what they're looking for.
Yeah. Exactly. So that's a little bit about leads and kind of the structure on the front end. Now, once for a recommendation, I know this is probably going to be a question. For a recommendation for a new agent starting in, a good place to start for your lead order would be about 15 A leads, maybe 20. I wouldn't go over 20. I would say 15's actually probably, depending upon your level at which you're at. But if you get 15 A leads a week, you're going to be setting probably about 13 to 14 appointments and sitting with about 11 to 12, more than likely. And that'll be very easy for you to hit the 10K that you're looking for. Probably even more, depending, especially if you do like Spencer, like how you do, where you have all the policies delivered to you and then hand deliver them, because you can get second follow-on sales afterwards. So,
we'll go a little bit more in depth in this call, talking about deliveries and how to kind of generate secondary sales and third sales, and how to even talk about getting IULs or conversations like that. Because I find out this is kind of a norm that everyone can be self-aware with. And I've seen this from a lot of different kind of agency standpoints, what's being taught to them, and even IMO standpoints of, hey, make the sale and then go bury your head in the sand and hopefully your phone never rings, because they teach you that, hey, if your phone rings, it's probably an agent, or not an agent, but a client that's calling you to cancel their policy. They're saying they're not home anymore, so they're canceling their appointment. Just ignore your phone. But for me, guys, you'll notice about me when it comes to my clients, I answer almost every call that I get from a local area code, because I know it's usually one of my clients, but I don't look at it as a negative thing. I look at it as a positive way to either solve a problem so I can avoid them canceling the policy. But more importantly, I try to create relationships with these people. It's not just always about selling it to them. And I usually say my goal is I want to become that family's insurance agent, not just always make a sale with an application. Because I know if I become their insurance agent, I want to be known. One of the biggest compliments they can give me is they brand me as the insurance guy. And I'll answer the door. It might be my third time coming out to their house because I sold them multiple different deals. Like, oh, the insurance guy's here. I love it. Brings a smile to my face, because I know every single time they're thinking of insurance, they're going to be thinking of me. So now when their kids need insurance, they're talking about scholarships for the kids for college, or they're talking about savings for plans for the grandkids. or their mom and dad needs a funeral arrangement plan or final expense plan, they're thinking of me. So that's oftentimes my goal of, rather than just getting a sale and be so focused on getting the sale, burying my head in the sand, and hopefully my phone never rings, try to look at it more as an opportunity than just a negative, hey, they're trying to cancel or whatever it is.
Yeah, absolutely. And so bleeding into or kind of transitioning into the next topic, which is phones. Got your leads in hands and you need to make your phone appointments. Now,
Yep.
a lot of people on this call probably have never called a mortgage lead. They've only called internet leads
Okay.
and or some form, or Facebook leads.
Okay.
And so the first note that I would say is that you cannot talk to these people like they're an internet lead. You cannot have that. Well, I mean, you could, but you're going to have less success. Okay. If you call up and say you're calling about the life insurance, they're going to be like, I already got that taken care of.
Right.
Don't do that.
Right.
You have to talk about mortgage protection. And it's got to be, hey, I'm calling about the mortgage protection response card you filled out because for your mortgage through this, whatever the lender is, Chase Bank, Nation Star, whatever. And what it does is it automatically reminds them of the form. It pulls them into that conversation. They're like, oh yeah, for whatever reason, clients don't see mortgage protection as life insurance.
Yeah.
They just don't. I don't know why, but they think it's a different thing. And so instead of trying to correct their thinking of it, the whole purpose on the phone is just to set the appointment.
Yep.
So Spencer, I know you have a really like just on and off, set the appointment, good to go, like for your phone script. So let's go over yours.
So let's back up for a second and just talk about mortgage protection as a whole for a second here.
Okay.
Because you brought a very good point. Guys, the whole idea about rebranding everything as mortgage protection is exactly what Greg mentioned. We're not trying to re-educate the population of what they think life insurance is. Because if you go talk to 5 different people, but hey, do you have life insurance? They usually think of 5 different things. They think of it as their insurance they got through their work, or they think of it as a whole life plan, or they think of it as a term plan. They don't realize how many different kind of options and variances life insurance can really come in, and how it can or cannot protect their family. Okay, so what we're trying to do is, again, rather than re-educate them, rebrand it as a completely different new market, and we're distancing ourselves from life insurance. Because again, people may think they already have life insurance, but it's funny to us because we know, but I can't tell you guys how many times I've met with people and say, well, hey, just so you know, I already have life insurance. And if this is life insurance, I don't want it. But I want some kind of insurance plan that will protect my home in case I don't come home tomorrow. And we're thinking in our head, life insurance. Okay.
Yeah, exactly.
But again, rather than say, no, well, that's what life insurance is, we're trying to create a new category of what mortgage protection is. So if someone will ask you point blank, hey, is this life insurance? I'm going to say, no, this is mortgage protection. There's some similarities involved, but there's a death benefit involved. But again, I'll cover a little bit later in this call about what specifically we're going to show them the differences are between mortgage protection and life insurance.
Yeah.
So transitioning here into the phone script, I'd say strongly, there's 2 major pillars of our industry when it comes to being a successful mortgage protection agent. It is going to be leads, and then it is equally being matched by the phone. I know a lot of you guys might be used to the phone calls where you're spending 10 hours a day on the phone, 3 days a week. That's not what I'm talking about. I'm talking about 30 minutes a day, maybe 3 or 4 days a week. That's all you have to do on the phone. But it is equally important what you do on the phone as it is off the phone. And what I mean by that is this: depending on the different types of leads you're going to be working, whether it be a B lead, whether it be an A lead, it's going to have a little bit of a different response rate and variance when you're using the scripting and you're calling these people. For example, when you are calling these A leads, they are highly intentful. They just got this letter in the mail a week ago, and they're hand filling it out and sending it back to us. I don't know about you guys, but I don't really open up my junk mail to begin with. And I certainly don't actually fill out my junk mail if I'm not actually interested in what I'm trying to pursue. So what that tells me is they want the insurance. again, we just don't have to mess it up. That's our job. Just don't mess it up. I don't even consider ourselves as salespeople, more as just customer service. So when it comes to actually being able to call these A leads, because it's so intentful, it's so fresh in their mind, you don't really have to worry about objections. But the biggest thing you're trying to do is just kind of predict what you're going to be, the response is going to be to the call. So you already are prepared for it. You already have it fresh in your head, and you're not going to be kind of caught off guard at all. So when you're calling after A leads, you're not going to get, I don't know what you're talking about. I already got it taken care of, whatever it is. Usually the most common objections you're going to get is, hey, I don't know what my schedule is this week, call me next week. Or can you give me the information over the phone? That's really the biggest objections you're going to get. And so if you don't know how to overcome those, we need to back up a little bit and try to work on your scripting and your wording. B leads is a little bit different. I usually say with B leads, make sure you're approaching everything accordingly. If you have the expectation of calling a bunch of B leads, let's say 50 B leads or 100 B leads, and you think you're going to close or schedule 30% of your calls, it's not going to happen. Okay. You definitely need to become a master of the phone before you start working the B lead market, because you need to literally expect you're going to get an objection every single time. Now, guys, I started off with B leads literally like the first 6 months of my career, because again, I was too afraid to spend $500 a week to start making some real money. So I started just off B leads. Now, the benefit of that is it makes you a trained assassin on the phone. So when you literally transition from B leads to A leads, you go, oh my gosh, this is the easiest thing I've ever done. I'm never going back again. But on the B leads, if you're going to kind of approach them, your scripting is going to be a little bit different, which I'm going to kind of go into here in a second. But again, you do need to expect an objection every single time. And you need to be so well versed of how to overcome that objection that there's no pausing, there's no stuttering. You're literally already in your head knowing what you're going to say in response to that objection. You're just waiting for them to stop talking so you can cut them off and overcome that objection and make an appointment out of it. Okay. So with that being said, psychology really quick here, guys, when it comes to the B leads is this, or not B leads, but just the phone calls in general, is we want to be very assumptive, not pushy. We want to get commitment from them in the form of an appointment, and then get off the phone as fast as possible. And so usually what I say is, your impression is almost like you're going to be delivering a gift to them. We don't want to tell them what the gift is, because then they may not want to have the gift anymore. So we want to kind of have there be a little bit of mystery of what we're going to be stopping by, what we're going to be providing to them, so then we can answer any questions they have and do everything in person. Okay, so my script pretty much verbatim when it comes to the phone is this. Hello, Greg. Hey, Greg, my name is Spencer. I work for a company called Advantage One Brokers. We work with your mortgage lender, Wells Fargo. I'm shooting you a call because it looks like maybe a week ago we got a letter from you looking for some mortgage protection information. And I'm actually going to be out in your area this week on a couple different appointments. I just need to schedule time with you for about 10 or 15 minutes for me to stop by really quick, answer any questions you may have, and give you that information you're looking for. So what's a better day I can stop by, Monday or Tuesday? Monday, okay, and I have mornings and afternoons available. What's a good time for you? Mornings, okay, how about 9 o'clock? Perfect. So Greg, again, my name is Spencer. I got down from Monday at 9 o'clock, and I'll see you there. So very direct, very to the point. I'm trying to be assumptive. I'm not asking them anything. I'm kind of telling them, and I'm giving them two different options. So there's a couple very key words in there that I'm going to kind of address really quick. So first off, notice I'm saying I need to schedule a time with you. I'm not asking, hey, do you think I can get 10 minutes of your time to stop by? I'm telling them I need to stop by. That's my job. What day works better? I'm not leaving it open-ended of, do you have any time in this week? Because again, people are very indecisive. My common analogy I give is ask your significant other or your spouse tonight, where do you guys want to go to dinner? They're going to say, I don't know. But if you say, hey, I'm hungry for pizza, do you want to go to Round Table or do you want to go to Ciro's? It's not a question. I don't know is not an answer. You got to pick one, that one or that one. It's the same kind of thing when we're talking about the days, when we're talking about the times, giving them an option. Option one, option two. Okay. That's kind of it as far as an easy script when it comes to A leads. My B lead script is almost the exact same with a very couple minor critiques. So it's just going to be, hey, ring, ring. Hello, Greg. Hey, Greg, my name is Spencer. I work for a company called Advantage One Brokers. We work with your mortgage company, Wells Fargo. I was shooting you a call because it looks like a while back we got a letter from you. I don't know if it got lost in the mail or something because I just got it on my desk today and we still have that information you were looking for. I just need to stop by for like 10, 15 minutes, drop that information off to you, answer any questions you may have. What's a good day I can stop by and do that for you, Monday or Tuesday? So all I'm doing there, guys, I'm just adding in the why. Again, the biggest idea when it comes to scripting is overcoming objections before they come up. So you can imagine one of the biggest objections you're going to get working the B leads is time. Hey, I sent that in 6 months ago. I sent that in a year ago, whatever it may be. So we're trying to address their concern before they tell it to us. And in that way, we can expect and assume the next objection. Okay, so that's my scripting a little bit, Greg, as far as just the actual script itself.
Okay. So I want to hit on one more part of your script because the number one objection that people give, especially for B leads,
yep,
and it's only for B leads, is I already have this taken care of. And you went over it in the original call. So I want to go over that, how you overcome with B leads, which is gold, by the way,
that's
objection.
the next thing, right? Like I mentioned, especially working B leads, you have to become an expert on the phone when it comes to overcoming objections. So as soon as you go through a little pitch, you'll notice, by the way, the phone script for me is not conversational. I'm not asking them a question, waiting for them to respond, then asking them another question, then asking them another question. If you notice through the scripting, I literally don't give them an opportunity to talk until they say Monday or Tuesday. There's no questions. The only time you might get some kind of response from the client is on that pause of after you say, hey, my name is Spencer. I'm shooting a call. I work with a company called Advantage One Brokers. We work with your mortgage lender. We got a letter from you looking for mortgage protection. That's the only time you may or may not pause. It's kind of up to you about how much of a bulldozer you really want to be or assumptive you want to be. Because you might get a little you might get a what. But again, the whole idea with the script is I don't want to get any objections. I literally want them to tell me Monday or Tuesday. So, but when it gets to the end of the script on Monday or Tuesday, you need to start listening and be very attentive of what kind of objections they're about to give you. So I said on the last call, by far the most important objection to be able to overcome is I already got it taken care of. Because you have to remember, these people that already got their insurance when you're selling off a B lead 6 months ago, you don't have to sell them on why they need it anymore. They already bought into it. And oftentimes it is going to be the easiest sale that you'll ever kind of take on. The next thing when it comes to this objection is you have to fully believe, and I can't convince this of you, you have to truly believe we can give them a better opportunity or a better option than what they have right now. Do not leave anything up to doubt at all. So again, my usual rule of thumb is if someone's got an insurance plan in the last 3 years, I can beat their plan every single time without even needing to know what it is. And you have to truly believe that. Okay, so there's a few different ways, like Greg kind of mentioned, that you can overcome this objection. And it usually comes down to the response of how likely are they to stay on the phone. Oftentimes, obviously, if you're dealing with someone who's older, they might be a little bit more, oh, how's your day going? And a little bit more conversational. And for that kind of person, I might say, hey, you know what? Great. You're one step ahead of the game. I want to let you know, though, so we're actually a broker, and we offer about 100 different insurance companies. And there's a good chance that the company you signed up with about a year ago, we offer as well. But I've been doing this for a very long time, and I find out every single person I meet with isn't aware of all the different other alternative options out there. And I can save people a minimum of 30% of what they're currently paying right now. So Rita, what I want to do is I want to stop by really quick. I want to just show you a comparable rate. At the very worst case scenario, it'll reconfirm you already have the best deal out there. Otherwise, if I can save you 30%, that's obviously going to be ending up saving you thousands and thousands over the course of the lifetime of your policy. So Rita, what's a good day I can stop by, Monday or Tuesday? Okay, so with that, guys, you'll notice again, every objection that we're going to be overcoming needs to end with a close. So what that means is you're overcoming the objection, and then you're always ending it. So again, it takes about 10 minutes, 15 minutes for me to stop by and do whatever I mentioned. What's a good day for me to stop by? And it's really important that we add that in there because we don't want to leave it open-ended because you're leaving yourself exposed to get another objection. Okay, I've seen people that will literally get 15 objections over and over and over and over again because they're just answering their questions. And in the client's mind, they're just trying to come up with different ways of why they can get out of this. Remember this, guys, people are naturally polite. They don't want to tell you no. It's easier for them to tell you yes. So try to make it as easy as possible for them to say yes and almost uncomfortable to actually say no. Okay. The next way to overcome this, people, are these kinds of objections. Because we obviously also know not everyone is going to be so polite and they're going to get off the phone in 5 minutes. They're literally going to act like, hey, you have 5 minutes or you have 5 seconds before I hand the phone to you. And you need to say something quick and sharp to get them to keep on the phone. So what I might say is, hey, Greg, you have the one that's free, right? And usually you're always going to get some kind of reaction. What? Free? Yeah, so you got the one that's free where over the course of that 30-year period, if you don't use it, it actually gives you all of your money back, creating a net cost of zero. You got that one, right? Because if you didn't, Greg, I think you probably have the old type of mortgage protection. I need to get you updated with the new plan to where it literally becomes free for you. So Greg, I'm going to be back out in your area this week on a couple different appointments. What's a good day I can stop by, Monday or Tuesday? Okay. One more here, guys, too, just because it's a little bit more creative. You have to kind of word it very appropriately to where it's not too misleading with everything. But this one can just be one of the easiest ways ever to actually overcome this objection and really get in front of them face to face. And it goes to this kind of psychology of way of thinking. Everyone here has seen the Geico commercials that you can save 15% a month on your car insurance. Does everyone here have Geico? Probably not, because we don't actually think, hey, Geico can actually save me 15% on my car insurance, right? Because again, they leave it to doubt. When you look at the Geico commercials, they're very careful in their wording. They say, we can save you up to 15% on your car insurance, which could mean zero. It could mean it means more expensive. It could mean it's 5% difference, okay? We leave things to certainty. But on the contrary, if Greg has USAA, and someone calls up saying, hey, I work alongside of USAA, and I'm calling I can get you a better plan on your car insurance, there is a huge level of confirmation that, hey, this guy knows what he's talking about. If someone that you've already been used to working with before calls you up to offer you a better deal, you're going to have a different approach on that person than the person that says, Joe Blow off the street. So what I'm getting at with this is, if Greg says, hey, I already got the insurance, don't call me ever again, I would say, yeah, that's actually why I'm calling. I don't know if you remember, but we actually made you a promise about 6 months ago when we got you that insurance plan, that if we ever can get you a better deal, we'd let you know. So that's why I'm calling today, is it looks like I can drop your payments by 20%. I just need to make sure no health changes have occurred. So Greg, all I have to do is just stop by really quick, just make sure no health changes have occurred, get a couple signatures from you, and I'll show you what your new rate will be. What's a good day I can stop by, Monday or Tuesday? And that's it. And guys, what's great about overcoming these objections appropriately is when you go to that house to make the sale, you don't have to sell them at all. I don't even go into my script. I don't go into why they need it. I don't go into how it works. I literally say, what do you have? Okay, here's what your new rate's going to be. Sign right there. And we're literally filling out an application within about a minute and a half. And that is why I like the I already have an objection so much, is there's huge levels of opportunity out there. And a lot of our competition out there are using companies that are, a nice way to put it, less competitive than other companies. And that's why I feel very strongly we can always save them money, or at the very least, give them a better deal on what they currently have. Okay. So I want to address this because I saw it from Maria. How do we guarantee this? And this is going to be a little bit more into replacements here. I'm going to kind of circle back on the call. There are 3 different ways to replace a policy. You can get them a better deal, which is obviously the easiest one. So let's say someone has a Mutual of Omaha product, and in your head you already know, hey, I can use the John Hancock or Quility Term or American Amicable, and I can save them 40% right out the gate. You have $200,000 of coverage, you're paying $100 a month. Now I can give it to you for $60 a month. That's obviously the easiest way to do replacements. But the second way to do it is to be able, I'll see you later, John. The second way to do it is get them a better deal or a better product. And guys, every single insurance plan that's ever been sold does have a negative side to it. And there's always a room to be able to build doubt, show them the negative side of it, and then show them an alternative product that has a positive. And what I mean by that is this. And this is a very, very helpful tool that will greatly help you guys in all of your sales. And it's an exercise you guys, I'd recommend kind of role play or talk to your managers about, or just get really kind of tuned with it, is try to think of every product out there that you guys can offer and come up with a negative side of it. Okay, so really quick, term life insurance. What are some of the negatives? What are some of the positives? Okay, term life insurance, it gives you the most amount of coverage at the least amount of cost, but it also has the least amount of guarantees, which means if you got a 15-year term plan and you're still here in 15 years, which hopefully you are, you just lost every dollar you paid into it. Okay. Whole life, on the contrary though, whole life. What is the downside and positive of whole life? On the positive side, it's guaranteed. You can't lose money, or no, you can't lose money, but you can't not get paid your death benefit as long as you're continuing to make payments on it. But what you're giving up for that is a much more expensive premium. Where we have all probably seen a lot of different situations out there where a client has been paying into a policy for 35 years and they've actually paid more into it than what the death benefit is actually worth. And you can use these different kind of negative sides to build doubt and show them a better alternative to what they currently already have. To give you guys an example, I had a client that had a $100,000 term life insurance plan. They had 7 years left on it. They're paying $200 a month on it. And literally for the exact same price, I got them to replace it with a $10,000 whole life plan. Now, some of you may be thinking in your head, oh my gosh, that's crazy. Why would you do that? That's a disservice to the client. And it's really not. Because all I had to do is I talked to my client and said, hey, Mr. Client, do you think you're still going to be here in 7 years? He goes, I hope so. Okay. Are you willing to gamble that you're still going to be here in 7 years? He goes, no, I don't want to bet on my life. I don't want to bet against me. So I said, okay, so what if I can get you a plan? It's not going to be as much coverage as you currently have right now, but what it will do is it's going to provide you a certain level of guarantees and extra protection to know this will be the last insurance policy you'll ever have to buy. And now it's guaranteed to pay you out. You don't have to hope and guess 6.5 years from now, hey, I got 6 months left, so I hope something happens to me. Okay, so there's always room to negotiate and show them a better opportunity than what they currently have right now. That was just a couple different examples, guys, but we can go through the list later on. It goes through, you can do the same thing for IULs, you can do it for return premium, you can do it for ULs and everything in between. Okay, so that's how we can always guarantee we can get them a better deal, or at the very least, again, a better plan than what they currently have. I've yet, in the 10 years of me doing this, ever come across a situation where I was meeting with someone that's gotten a plan in the last 3 years that said, hey, you're good, you're taken care of. I can't do anything here. I can't show you value anything. I can't get you a better price. It's never happened. I don't actually ever seeing it happening in the future before, but again, if you guys run across something, please run it by me, so I can usually try to find a different angle to take with that.
Awesome. So I think that breaks down the scripting, and the last point I'd say about the scripting when it comes to your phone script. There's a lot of different phone scripts out there. My phone script's a little bit longer, and I actually do ask questions and I build a lot of value, and I try to make it to where my the client remembers me, so that when they show up, they're like, "Hey, what's going on, Greg?" That's my goal. I want them to remember me. So it doesn't matter which script you use so much. What matters is how you say it and your confidence on the phone. If you're really scared and you don't have your script down and you go to get on the phone and you're like, I'm calling about the mortgage protection, they're going to be like, I don't know who this guy is or this gal is. It's done. So you just got to be very confident and with whatever you're saying. So in home, let's crush some in home.
Let's do it.
what everyone's probably waiting for. So I know my in-home is pretty quick. I can usually be in an app within 5 minutes. And that's pretty standard for me for a mortgage protection. So
I'm glad we don't have to debate on that, because I've seen a lot of scripts. I've seen a script from somebody that was 26 pages long. First off, how do you remember that? And secondly, are you just trying to educate the client on everything you've ever known before? So yeah, I'm glad we can agree on that for sure.
Yeah, definitely. And so let's go into and that's a good segue, because that's more of the psychology behind what you're saying and why you're saying it. So let's talk about the psychology and lead that into our scripts.
So first thing with timing, I try to put myself in real life situations that I've actually experienced myself, and try to kind of be able to create the script from that. Because a lot of people ask, well, hey, you touch your script. I've created this from just trial and error over years and years and years and years and years doing it. And a great kind of analogy I can give you guys, or example of the way that we position our script, is this. About 8 years ago, I owned a home and we wanted to paint our house. We were actively looking to paint our house. And lo and behold, a kid, probably 22 years old, showed up at our doorstep offering to, selling a service to paint houses. I'm like, oh my God, I'm actually looking for this. Unreal. And he came in and tried to literally give us the history of paint. Well, this is where paint came from. This is the paint that we use. This is different examples of paint and all the different kind of things. And he literally was there for about 2 hours giving me a history lesson of paint. And about an hour into it, I said, I can't deal with it anymore. My wife, Maddie, I'm like, you take care of him. I gotta go. I can't keep doing this. And so he literally talked himself out of a sale, is what I'm getting at. And so I try to put myself a lot in the client's shoes about what they expect, and what their time is also valuable as well. And that's why I said previously, again, guys, we're not cold calling these people. We don't have to educate them on the history of insurance or why insurance is valuable. They know insurance is valuable. They know they need this. They responded to direct mail of all things to actually get the information. All we have to do is kind of guide them in the appropriate direction without talking ourselves out of the sale. Okay, so again, going back to just scripting 101, we're trying to overcome objections before they actually come up, A, but B, we're trying to address all their concerns and points within a very condensed, and we're choosing our wording very carefully. If you guys know certain characteristics of yourself, that you're a talker, just be self-aware of it. Now, there's nothing wrong with trying to build a relationship with these people. If you want to talk to them about, hey, we have similar characteristics, and you try to build a friendship and a relationship, that's totally okay. But what you do have to be careful with is make sure you understand who you're talking to. Because some people are going to be all about that. The 78-year-old, single grandmother may love to talk to you for 3 hours. I can promise you this, though, if someone like me is on the other side of the chair, I don't want to talk to you for 3 hours. I want what I want in 5 minutes, and then I want you to get out of my house so I can carry on with everything else I have going on in my life. Yeah. Just make sure you're defining who you're talking with and what their level of time really looks like.
Absolutely. For one thing, and you can let me know if that's how you do it, but when I first started mortgage protection, I had this whole opening spiel of I had a binder with my state license in there, kind of like, hey, here's me, here's who I am. This is a little bit more mortgage protection. I didn't like give them a whole like history lesson, but like I really wanted to set the stage of like, this is why I'm here. This is what we're going to do, walk them through the process. And it was about somewhere between 3 to 5 minutes of like introducing myself before I even got to asking them questions. And I one day I just got rid of that and I stopped because I was like, why do I need to show my license? They're already letting me in their house. They let a stranger in their house. They asked for this. I called them. They set an appointment with me. They're there. They let me in their house. They want this. They already know that I'm licensed. I don't need, unless they ask me at that point, like, hey, are you even licensed? And I'll be like, yeah, here, let me show you. Right. And I have it, but I got rid of all of that. And what I found was that it actually helped quite a bit. And it turned it from a salesy presentation, which is that's what that kid was doing. He was trying to sell you. Yep. And that's why you were just like, oh man, I'm out. I'm deuces, I'm out. Because he was trying to sell you on that. And you didn't have to be sold. You were already sold. He just didn't pick up on that. And he sold himself out. And so I know that I used to do that. And yeah, Marcos, exactly. Keep it simple. And I know a lot of people that came from my previous company, that's how we're taught, was to do that. And so for me, all I do is I just say, hey, my name is Greg. Here I am. This is what I'm doing. I'm here to learn about you and see what fits you, what makes the most sense for you, what you can be approved for. I'm going to take those factors, come with some options, show those options. One of those works for you. Awesome. I'm your advisor moving forward. We'll see if we can get you approved today. Have any questions? Nope. Is that fair? Yes. Okay, perfect. Done. Intro done. 30 seconds. Yep. And it's off to the races.
I have a saying, it's, if you make it a big deal, it becomes a big deal. Mm-hmm. I use the same kind of thing with COVID. When COVID first started, what are you doing? What are you telling people? I'm not doing anything different. I'm just acting like I don't got COVID. Do you? What's the big deal then if COVID is going around? The same kind of thing, like bringing out your license with everything. If people start bringing out their licenses and their IDs, it's kind of like, are you a criminal? Why do I need to know all that stuff? Are you going to steal my identity? Like that's
exactly.
almost a little more suspicious. So yeah, like keeping it simple. But I also I want to add in there, go under the notion, if you make it a big deal, it becomes a big deal. So going back to like my overall demeanor and the psychology of the sale, I'm a chameleon. I adapt. Final expense is a little bit worse, but again, mortgage protection guys, our target market is middle, lower income. I go to the hood, right? There's some places I go to the hood, South Sac, and my wife makes fun of me because I'm from the hood. Like that's what I turn into when I'm down there. I'll go, what's up, man? How you doing? So don't act like you're the repo guy in a suit, coming in with a suit and tie, trying to knock on their door, act like you're going to take over their house.
Yeah.
We want to kind of give the demeanor that we're here just as a friend almost, and we're doing this for them, not for us. We're not trying to sell them anything. We're just trying to educate them and help them on what they actually need for. Exactly. So the first thing is, it's not just the way we look. I'm super casual, guys. I don't wear a suit. I don't wear a tie. I wear literally a polo, jeans, and dress shoes. Now, you don't have to go that extreme, but that's it. I have a binder that I bring in, but that's more of a crutch. I don't even open the binder. I don't give them anything. So oftentimes, too, that's another question, I guess, do you use brochures? Do you use pamphlets, anything like that? And I don't.
I don't either.
I don't write anything down. I don't. The only thing I'll do is I'll show them the lead that they sent into us to build that kind of, just this is who I am. But then I take it away from them. Because guys, if you give them anything, their attention is on that. Even if you write down a number, they're going to be looking at that number. Like, is that the price? Is that how much coverage I'm giving? For the term? What's that number? So same thing if you give them the lead and you just give it to them, they're just going to start reading it. And you could be talking, doing your presentation, they're just reading the lead. So make sure we're very careful of what kind of sales crutches or things that we're using in our presentation, because oftentimes their attention is going to be to that.
Yes, absolutely. I've never used pamphlets, folders, brochures, anything like that. And usually when people ask me, when I have agents ask me like, hey, should I, and where do I get them from? I tell them, I wouldn't recommend it, but if you really, really want it, you can go to the carrier.
Yep.
And they'll ship them to you for free.
Yep.
So when it comes to your mortgage protection appointment, how do you do your intro? What questions do you ask? Just kind of leading. And you and I will do I'll be the client, and I'll answer the questions, but we'll go all the way to where the.
Well, why don't we make this real, Greg? Why don't we make this real?
Okay.
So because I know this is common too of, hey, how do I incorporate certain products that I'm now new to using, and where and when would I use those certain products to prepare and game plan for an appointment?
Yeah.
So Greg, tell me, you don't have to be Greg in this example, but tell me, how old do you want to be? How much is your mortgage right now? Let's make a real lead here.
Okay. So I'm 45.
Okay.
I'm single.
Okay.
And I have 2 kids that live with me,
Okay.
a 17-year-old and a 15-year-old. Mortgage is $145,100, and it's a 30-year loan.
Okay. So guys, really the only thing you need to actually game plan an appointment is their age and their coverage amount.
Right.
And again, I don't ask health questions on the phone because again, I don't need them. Nothing they can say on the phone is going to deter me from actually going to the appointment. Some will argue that, hey, it gives me a better idea of what I'm going to be pitching right off the front. But again, if you prepare accordingly for your appointment, it really doesn't matter. So 45-year-old male, $145,000 of insurance. Plan A is just a simple, no money back option. And this is going to be really dependent upon what companies you guys have access to. A lot of these companies are interchangeable. So it's not like you have to have this one company to fit Greg's portfolio that you just gave me. So whether that be Foresters, the new Quility term, John Hancock, American Amicable, Americo, Royal Neighbors, Assurity, every company I just mentioned will fit the portfolio of that Greg just gave me for a plan A. And plan A is a no money back option and a money back option for someone who's relatively healthy and can get approved for a term. A plan B is going to be a little bit more difficult for the portfolio that Greg just gave me because of his age, where plan B, for those of you guys don't know, we transition to plan B if we find out, hey, Greg had cancer 5 years ago. And what I was going to pitch him a non-med simplified issue term, I now have to switch over to a final expense product because he can't qualify for a term. And guys, I did a call on this earlier. Just for those of you that are new to mortgage protection, the rule of thumb is this. If you can get them a company and they can qualify for term, make sure you are leading with a term product. So if they're 72 years old, but you still have a product that can go up to age 75 for non-med term, companies like Foresters will do that. American Amicable will do that. There's a few other ones that will do that as well. Still be pitching term. The only time you should transition to a plan B or to a final expense or critical period concept is going to be if they cannot medically actually qualify for it. Because remember, when it comes to mortgage protection, the easiest sale to make it easier for you and for them is give them what they're looking for. Again, they're by definition, term is designed to cover a lump sum amount of money for a period of time, and then it goes away, which is literally the definition of mortgage protection. So keep it easy for yourself. Use term, you absolutely can. But going back to Greg here, plan B, there's only a couple companies that will go down to age 45 for non-med, okay? And this is for final expense if he's not healthy. So one would be American Amicable. They have 2 different final expense products. Their Family Legacy and then their Senior Legacy. So the Family Legacy or Senior Legacy goes from 0 to 44, 45 to 85. Another one's Transamerica, and the other one's UHL. All 3 of those companies pretty much go down from age 0 up to age 80 or 85. So that will still offer Greg a product that's non-med, it's a little bit more lenient for health or underwriting. Now, if Greg's in really bad shape and he's currently battling cancer right now, and I can't get him approved for either one of those 3, there's 2 guaranteed issue products that we can even talk about. There's AIG, and then there's Great Western. Now, for those of you who don't know, AIG, the minimum age is age 50. So because he's 45, we can't get him approved for AIG. Great Western, probably the only situation you're actually going to use Great Western is because they go down to age 40. So for Greg being 45, he fits right into that kind of equation. Our plan C is going to be running a quote for that product, Great Western. Okay, so now, Greg, we have a game plan of what companies we're going to use, what products we're going to pitch going into meeting with you. Okay. Are you ready? I think you're muted.
I am ready.
You're ready. Okay. So first things first, we're trying to find a lead. This is my lead for the actual demonstration purposes. I'm going to go knock, knock. And then guys, just so you guys know really quick, I'm going to pause periodically throughout this presentation to make a couple key points to really make sure you're understanding why we're saying something or what we're doing. So knock, knock. Hello, Greg.
Hello.
Hello. Hey, Greg. My name's Spencer. I'm with the Mortgage Protection Company. I talked to you on the phone the other day about me stopping by. Is there a good time or we can sit really quick?
Yeah, absolutely.
Is this table okay right here?
Yeah, this is fine.
Okay, great. So, Greg, how's your day going so far?
Oh man, it's going well. Just got off of work.
Good.
Stayed busy today.
Good.
So,
Well, Greg, hey, I'm going to make this really quick and easy for you. Like I said on the phone the other day, this takes no more than about 10 or 15 minutes. I just want to kind of go over what this is and go over a couple different options for you.
okay.
So guys, quick side note here. Very important to note. I call this thing dead space. And it literally, your entire presentation and the tone and the mood starts from the time that you knock on the door. I get a little bit, analytical with certain things and kind of particular, but even the way you knock, okay? Like I started off selling Comcast door to door before I could transition into insurance. And you knock, okay? So even sometimes doing a very soft knock, I feel like it's setting the tone where you're putting them into control a little bit. And that might be a little extreme, but again, as soon as they answer the door, I don't want to be the one leading everything. I wanted them to be the one filling that dead space. That dead space is that awkward period of time or the transition where no one knows who's going to attack first or what are we going to do. Okay, so my job as a professional insurance salesperson is to fill that dead space and make it genuine again. You can just ask them, how's your day going? Oh my God, it's so hot out today. Like, how are you surviving? Whatever it is, keep it genuine. Again, I'm not the person, I've used this example before, where if you go into the room and you see like a baseball picture, unless you really like baseball and you can actually connect with baseball, don't be like, oh, you like baseball? I like baseball too. We should be best friends. No, make it genuine and make it somewhat relatable to what you can actually kind of relate to. Okay. So going back into it, I'm going to say, so Greg, we got this letter from you that you probably sent in a week or two ago. Like, Greg, when you sent this letter to us, was there anything that you were kind of looking for or just trying to get more information on?
I was just trying to find out some information, in case anything happened to me that my kids be taken care of.
Perfect. Absolutely. Guys, side note again here. This is a very, very important key step of the presentation is asking them what they were looking for. Okay, because oftentimes they're going to tell you, and you can even know in the first 10 seconds of this presentation if it's going to be an easy buy, and maybe you just shut up and go right into a sales pitch. Or you might have to dig a little bit more. For them, if they were to say, you know what, I just want to take care of my kids in case something happens to me. Oh my God, sign right here, $80 a month we're taking care of, right?
Yeah.
But oftentimes too, they might address other kind of things. So for those of you guys who don't know what an actual lead looks like, there's different things on there. It talks about disability. It talks about critical illness. It talks about the different kind of things that a mortgage protection plan can do that people are not aware do for life insurance. So they might say disability. They might say, well, hey, I'm actually looking for long-term care coverage and I just want to see how this might fit into that portfolio. Mm-hmm. Whatever they give you that's not related to our standard pitch, make sure you go all in with it. If they talk about long-term care, your next 5 minutes should be talking about all the different benefits of this kind of long-term care coverage through living benefits compared to a traditional long-term care plan. So make sure we're really listening to them and again, addressing any of their concerns that way. Okay. So going back to that, I'm gonna say, okay, Greg, so perfect. So just so you know kind of how this works, Greg, is this is called mortgage protection. Now, what happens is when someone's had recent mortgage activity, like a purchase or a refinance, you kind of have a narrow time to qualify for a mortgage protection plan. So you get these different letters in the mail just to get you that information before that window closes. Now, generally speaking, Greg, this is a plan that covers the duration of the mortgage or the amount of the mortgage. So if anything happens to you, your house is taken care of for your loved ones and family. Mm. Now, Greg, you mentioned before you have a 30-year mortgage. Is that pretty accurate?
Go ahead. Oh, Greg, sorry, he was.
Very good. Very good. So, Greg, you mentioned before you have a 30-year mortgage. Is that accurate?
That is accurate.
Okay. So, Greg, so the way this plan will work is this plan, you are the owner of it. It is attached to you. It is not attached to the mortgage. It is not attached to the loan. Now, that's very important because if you ever move to another house within that 30-year period, let's say you refinance, let's just say you move, this is staying with you. You don't have to worry about getting a new plan every time you move. Now, what's more, Greg, is the coverage is actually level. So right now you owe $145,000 on your mortgage. That number is obviously dropping because every month you make a payment, your mortgage balance is going down with it. Your coverage is locked in at that 145. Mm-hmm. So regardless of something, God forbid, happens to you tomorrow or 20 years from now, we're still paying that full $145,000 benefit directly to your beneficiary. Okay, so probably the biggest advantage to mortgage protection, Greg, is you don't have to die to receive the death benefit. Now, guys, quick side note here, make this a big deal. Remember, this is a big difference between life insurance and mortgage protection. A lot of your scripting can be very interchangeable and you can use different kind of verbiage every presentation you do. For example, if I give you guys my presentation 10 times in a row, it's going to sound different 10 different times, with the exception of a few different key lines, that being one of them. One of the most powerful statements that really does grab their attention is going to be, you do not have to die to receive your death benefit. Because it's always going to usually kind of warrant some type of what does that mean? And again, it's also your big difference maker between life insurance and mortgage protection. And so again, use certain kind of sales techniques to be able to make it a big deal. If you guys didn't notice, I slow down my speech. I kind of increase my volume. I'm really emphasizing the importance of you don't have to die to receive the death benefit. Okay. Yeah. So yeah, Greg, the benefit of mortgage protection is you don't have to die to receive the death benefit. So included with these plans is something called living benefits. And the best way to describe them, Greg, is you're basically getting a bunch of different plans rolled into one for like a fraction of the cost. So in addition to the death benefit, you're also being qualified for permanent disability, critical illness, and long-term care. So what their definition is, Greg, is if you have a life-altering event, things like you get in a car crash and now you're permanently in a wheelchair. Perhaps you had a heart attack or a stroke or cancer, or especially if you get put on long-term care. Things like that, they're actually going to give you a percentage of the death benefit up front while you're still here to take care of other expenses, take care of the house, whatever you need the money for. Okay, so Greg, the way we work is we're a broker. Okay, so my job is I work for you. My job is to create a bidding war amongst all the different insurance companies that we work with, leverage them against each other and see who's going to come up with the best deal. So with that being said, I found there's two different options that would give you the best deal. The first option is our standard mortgage protection plan. Now with that, it's going to give you the most bang for your buck when it comes to price and coverage. But with that, it's essentially going to last you the 30 years or that 30-year period. If anything happens to you in that time frame, you're covered. After 30 years, you go your way, the company goes their way. You're kind of just buying peace of mind during that 30-year period. Now, option two, Greg, I can only even offer to you because you're as young as you are. It's the same benefits as option one, but after that 30-year period, if nothing's happened at all, which hopefully nothing does, you actually get all of your money back, essentially creating a net cost of zero. It's kind of like a savings account. I mean, Greg, this is the best way I can kind of give you an analogy of. Imagine if your car insurance company said, hey, if you don't get in a car crash ever again, we'll give you all your money back on your insurance. It'll never happen, but that's kind of what you're getting with this kind of plan.
Yeah.
As quick side note here, going back to the idea, people are very indecisive, right? So even if you give them just two options, and there's a reason we only give two different options, you still are going to have some people that go, I don't know, I got to think about it. I got to talk to this person. I got to talk to this person. So you can start getting a sense, depending on what the prices are going to be, what the client's body language is. Are they nodding their head? Are they, figuring out what are they actually more attracted to? And you try to steer them again. You're trying to be a shepherd, steering them down a direction where they're subconsciously making the decision for themselves, but really you're the one navigating them to go directly to the product that we're pushing them to. If you guys didn't notice there, I was pushing Greg more towards option 2. I still left option 1 on the table. I still talked about the benefits of option 1, but by just using a little bit of analogies, using a different kind of verbiage, getting excited about it, my voice goes up a little bit, I'm slowing down. I'm naturally showing, hey, I think option 2 is a better option for you. I think you'd agree with me. Just say the word.
And you use a couple other things you did on top of that. Like when you talked about the term, you're like, hey, it's really great. It's bang for the buck, but if it's only going to cover, it's only going to do this. That's it. And so like you ended it kind of like going down, but then the entire time you talked about the cash back option or the ROP, when you did that, it was all uplifting. It was like, hey, you're going to get your money back. It's basically, and you like you said, you did the comparison. It was all uplifting, and you also did it secondly, like so that when they think back on the options, they'll remember the one that is the most recent you just talked about. Right. And most people are going to be like, well, I want the one I get my money back. Like it's a guarantee. Like that's it. Absolutely.
That's it. So now, guys, we kind of transition from there, into the scripts. I'm sorry, not the scripts, into the closing. And there's 3 parts to the close. It starts right after you go over to option 1, option 2. This is Greg. So to give you an idea as far as pricing, a lot of this, again, there's a lot of different unknown factors that can make the price go up or down. For example, I don't know too much about your medical background. I don't know which company will approve you. I don't know how much coverage they'll approve you up to. And all of that takes a factor into price. So giving you an idea, for option 1, which again is the most bang for your buck option, it's our standard mortgage protection plan, it can be anywhere from about $70 a month to about $80 a month. With option 2, being again the one where you get all of your money back if you don't actually use the plan, it's kind of like insurance on your insurance. With that option, it's going to be anywhere from about $150 a month to $160 a month. So Greg, with that being said, those 2 options we've talked about so far, which option do you think would probably work be most beneficial in your position and your family?
Yeah, I would still want to get my money back.
Okay, so option 2. So Greg, I'll be honest with you, I have the same plan myself because again, if you can afford it, it's essentially an insurance plan that's absolutely free. So Greg, here's what we're going to do today, is we're going to fill out an application. This will give us allow me your permission to do my job, start shopping around for you, create that bidding war like I was talking about. Then I'm going to come back out in a few weeks. I'll show you exactly what your best offer was, who got you approved, what your rating was, what the price is going to be exactly, and then you can decide from there what you want to do with it or not.
Okay, sounds good.
Okay. So Greg, a couple disclosures before I start actually filling out this application with you. So like I mentioned before, this application will give us permission to look at you medically, just make sure I do my job and look at you on a medical standpoint. But what's more, my job is to get you the best health rating, which will obviously make the price go down. So what that means is, David, I'm going to get back to you 1 second. I like the question.
It's about to be answered, baby bird. I know what you're doing.
So Greg, so with that being said, what's going to happen is when they approve you for a plan, whether it's a week from now, whether it's 2 weeks from now, at that time, they are going to charge you 1 monthly premium to lock in your age, lock in your rate, and issue a contract for you to review. Everything is fully refundable. So if I stop by and you say, hey, change your mind, talk to the wife, forget it, they'll just refund that money back to you. Okay. So Greg, spell your last name for me.
B-I-R-C-H.
And then we jump right into the application. That's done.
Yeah.
Now we got to talk about the close. Because a lot of you guys are asking, hey, is this a 2-time close?
It's
This
not.
is a 1-time close. 1-time close. I like your question too, Maria. We're going to talk about that too. I wanted to point out a couple things with here. I did not talk about the company one time. I did not name the name of the company. And my question for you guys would be, why do you talk about the company? Because first off, what it's doing is you're bearing yourself.
Yeah.
Because how many times has it happened to you guys where you find out, I'm pitching Mutual of Omaha. Oh shoot, they got declined with Mutual of Omaha. Now I have to have a very awkward conversation with the client saying, hey, Maria, remember that awesome company we were talking about? Well, guess what? We didn't get approved for them. We have to use a secondary company over here. Okay, now you look like they're getting the second best company. And oftentimes they don't want to have any more conversations with you anymore about that because they're moving on. Oh, well, forgive it. Well, sometimes they even get defended or offended, right? Why would they not approve me? So there's a couple reasons I developed this close. I'm going to kind of talk to you guys about it. First off, it overcomes any objection you can possibly think of. Okay. What are some common objections you guys get? I need to think about it. Right? You can feel really good with an appointment. That guy is super nice. You know, they're going to buy me. They're going to call me back in a few days. Guys, understand the objection of I want to think about it is an objection. If you walk outside of that house without some type of formal commitment in the form of an application, or in the very least, an opportunity to go back out there with a set date and time, you are never going to talk to them ever again. And that needs to be your thinking. If I'm walking out of this house without a application, a check, or some kind of formal agreement, you didn't make a sale. You're not going to make a sale.
Yep.
Okay?
Absolutely.
So if someone says to me, hey, I need to think about it, what do you need to think about? I don't even know if I can give you this plan. We don't even know what the exact numbers are going to be. I mean, I think you'd agree, Greg, right? That price is obviously going to be a very big decision maker for you, right? How much is it going to cost? Okay. I told you it's going to be $70, $80 a month. Okay? If I come back out and it's $30 a month, $40 a month, you're gonna be like, yeah, I can do that. That sounds good.
Yeah.
On the contrary, Greg, if I come back out and say, hey, it's $200 a month, that might make your decision really easy. I can't afford this anymore. Okay. Same kind of thing. If they give you the objection, I have to talk to my wife. I got to talk to my spouse. Again, what do you guys going to talk about? You want to do your research? Let me go do my research. You can go do your research. And how about we kind of compare notes when I come back out? Okay. So to give you guys an idea, my persistency is 94% with the carriers using this close. Okay. So I had a lot of people comment before saying, well, that's a soft close. Anybody can do that. You're right. Anybody can do that. But think about the psychology of it. And again, put yourself in the client's shoes. First off, if you give them a hard offer, I mean, a hard offer is this, hey, it's going to be $68.12 with Mutual of Omaha. Your first payment starts in 3 days. You're giving them a very hard close decision where they're going to be put on the spot and they're going to be thinking in their mind, do I want to commit that for the next 20 years? I haven't talked to X, Y, or Z. I haven't done my research. And people, for whatever reason, they just don't like making hard decisions. They kind of like to be massaged into it a little bit. Think about buying a car, okay? When you go to a car dealership and there's the price on the car, do you just go, 50 grand? Yeah, sign me up. No, they massage you into it, right? They go, let's go for a drive, fall in love with it, check it out. No, let's go talk numbers. Let's work something out. Oh, here's my manager here. The manager's gonna talk to you too. 50,000, no, we'll get to you for 49,000. Now you feel really good. Now we're gonna make the sale, right? They're massaging you into it. It's the same kind of thing that we're trying to do. Give them in the habit of saying yes. We got them to commit to an option. We got them to commit to filling out an application and giving us all of their different information as far as their social, their driver's license number, everything, okay? Then at the very third step, we're getting them to agree to essentially being charged. We're telling them, we're gonna charge you. And it's gonna be between $70 to $80 a month and 3 days from now, 5 days from now. Now put yourself in that position. Would you guys agree to do things like that if you weren't actually interested in pursuing this different policy? No. Okay. So that's kind of the psychology of the close. Okay. Now let's kind of touch base really quick on the delivery. I do not do my delivery to cement the first sale. That's definitely part of it. I mean, I don't know what my persistency would be without it, but I do a delivery of every single policy. It's not to sell them in the second appointment. To give you guys an idea, I can't even think of the last time I've done a delivery and they said I changed my mind. Because again, what is some of the hardest things when it comes to selling insurance? We're not selling cars. They're not going to fall in love with the feel of it or the look of it or the touch of it or the sound of it. We're selling an intangible product that they cannot see. Ultimately, they're buying you. They don't care about Mutual of Omaha. They don't care about American Amicable or Foresters or Liberty Bankers. They're buying you guys. Okay. So now what's nice about it, when you're going there to deliver the policy, they can actually see a tangible contract with their name on it, with their beneficiary's name on it, and seeing what that's going to do if they don't come home tomorrow. Okay. You really think a client is going to say, you know what, I changed my mind after seeing that? I promise you they're not. Okay. So that's why I'm first reason of delivering my policy. Okay. So I made a statement before on the very beginning of this call, but I get 10 leads a week. I make 15 appointments a week. I'm a math guy. Those numbers obviously don't add up, right? Because I'm including in those 15 appointments, delivery appointments as well. And what that's going to allow me to do is I'm going to cement the first sale, like I mentioned, but more importantly, I'm looking for secondary sales. I'm looking for third sales. I'm looking for fourth sales. If I was originally meeting with Greg and Greg was a single father of two, I'm gonna be talking to Greg, hey, have you thought about getting like a college savings account started for your kids? Right, just trying to start talking about different ways to identify problems and show them a solution. Greg, you're 45 right now. Congratulations. Hey, we just got you a 30-year plan to make sure your house, your number one asset is protected for your most important people, your kids. Let me ask you this, Greg. Do you think you'll still need coverage after 30 years? Well, yeah, I need something. Okay, I think we agree, probably not as much, right? Hopefully in 30 years, your house is paid off and you don't have a mortgage payment anymore, but you still want to leave something behind to your kids, or you might have other debts that pop up over the next 30 years that you also want to insure. So Greg, what I recommend doing is rather than waiting 30 years to where you're now 75 years old and just going on the basis you've had no health changes over the next 30 years, which could not be true, the price will be, you can imagine, exponentially more than what you're paying right now. So what we can do, Greg, what I recommend doing is we can get you a smaller whole life plan, let's say $50,000, that will outlive your mortgage protection plan. That way in 30 years, you're gonna have a decision. And what's great about these whole life plans, Greg, is after 30 years, you say, you know what, Greg, life happens. Maybe you don't need coverage anymore. Maybe you won the lottery. You can cancel that 30-year plan, get all of your money back plus interest to where we actually paid you to be insured over the next 30 years, okay? Or you can say, again, I'm 30 years older. I didn't have a health change to come up. I can't afford to get any more insurance. And I really need the insurance now more than ever. You can continue to have that $50,000 plan last you the rest of your life for no additional cost at all. And it will continue to build cash value. And all I'm doing there, guys, is I'm selling them a universal life plan at target funding, and it will do exactly that. Exactly that. So that's the main reason, guys, I'm delivering my policy is I'm looking for secondary sales. I'm looking for third sales, things like IULs, annuities, everything in between.
And the psychology behind that is like I'm a big Grant Cardone fan. It's really easy once you've developed a relationship to where you've sold somebody and you come back for a second time. Getting secondary sales is actually a lot easier because they've already earmarked the funds for that policy because it's already started. They've already seen the funds come out, and now they're reworking with a new budget. So it's not like, well, they're not adding both of them together. Like, man, my insurance total is going to cost, the 70 plus an additional 80, so it's going to be 150 a month. No, it's the 70 is already allocated and that's forgotten about. So it's just like, oh, for $80, I'm going to have, this coverage that's going to last the rest of my life if I need it, or I can just get all my money back plus some. That's just $80. Yeah, sure. And then they already trust you. So it's just like, hey man, are you going to use the same card on file? Like, it's just like, I have all the information ready. It's like, hey, I got all your
And
information
guys,
from
it
before.
just, again, you're creating that relationship. You're becoming the family's insurance agent, because what you should be doing, if you're not doing already, is stay in touch with these clients every year.
Mhm.
Oh, hey, Spencer's calling me again. Because again, absolutely, like you said, I kind of took this concept from Grant Cardone of they're trying to support their first sale by making secondary sales.
Yes, absolutely.
The same reason, I think Grant Cardone uses the example of the guy will spend $5,000 on rims to put on a $2,000 car, right? Just because they're trying to solidify their first sale by making secondary sales.
Yep.
And again, even if you weren't that well versed as an agent, you guys will all learn new things as you become more experienced in this industry. And maybe on the second year, you're talking to these people, so you've learned about IULs. Maybe you learned about DFL. You learned about how to sell annuities. Talk to these clients and say, hey, I was thinking of you. I want to just do a policy review with you where I can stop by and maybe talk to you about some different things that's happening in the insurance world. It takes 10 minutes. I promise you this, not a single client you've already sold a policy to before will ever say no to that kind of conversation. And so lots of opportunities into your existing kind of client base.
Absolutely.
One more thing I'll note on this. There's a company out there, a lot of you have probably heard of, called Mass Mutual, and they're kind of the dinosaur of the insurance industry. And for those of you who don't know what their business model is, it's this: get 1,000 clients and retire. That's it. That's their entire business model, because what they do is they just keep reselling the same 1,000 clients over and over and over and over again. Now that might be a little bit extreme. I'm not saying you guys should do that, but that is a great idea, just to be able to mix with what we're already doing with leads, our new business, our war market, and everything in between.
Absolutely.
That's guys, my mortgage protection presentation for you there.
So,
hey, thanks for everybody for taking their time out of their day too, jumping on. I appreciate it.